Hello and welcome back. Conversations in Artificial Intelligence. This is Paolo, your host, and it is an honor and privilege to have you here. So today we're going to look at a very significant application of artificial intelligence for really the social good. And it's an application that allows basically a new form of banking for people that didn't have the possibility of have access to credit or small-term loans. So it's going to be very interesting because you really understand how this new wave of technologies can really shape the way of our everyday living for the good. With us today, we have Akshay Krishnaiah, who is the CEO and the founder of Unbanked. Hello, Akshay. How are you today?
Hey, Paolo. I'm doing good. How are you?
I am very, very good. So, Akshay, you have a very interesting personal story to tell. So, how did you end up in artificial intelligence?
I was working for PayPal. Our charter, as part of research labs, our charter was to go and look for problems that the rest of the company was not looking. And during that course of during that journey, I bumped into the financial diaries, which talked about the challenges that the underserved and underbanked face in the United States. And it was very familiar. It was surprising that there were so many people in the US facing this kind of problem. Of course, I was born and raised in India to a lower middle class family. And, I have faced this and I've seen it in India, but it was surprising to see it here in the US. As I dug through it, I learned a lot about why those challenges exist. Also, I had a very keen interest in the gig economy, because the hype was really increasing. This is like 2016. And I also wanted to understand, how is the gig economy? It's growing very fast, but what is its impact on people in the gig economy? So these two things were like top of mind for me. And as I started digging deeper, I was compelled to actually learn more. Unfortunately, from the outside looking in, it's very opaque. So I decided to quit and become a 1099 myself, put our house on Airbnb, put our 3 rooms on Airbnb, lived and worked on my couch, truly faced income volatility and the challenges of living 100% in the gig economy. With that seeded what has today become Unbanked. Further, I also, to diversify the data and to learn more, I drove on Uber, Lyft. I've done about 36,000 miles. All of this together, seeded what has become Unbanked. And because we wanted to create this underwrite credit for people with volatile income, we started using statistical models, and statistical models were not sufficient. At some point, we had to move to AI, and that's how I got into AI. It was purely purpose-driven. We had no intention of building an AI bank or company. It just happened.
So can you help us, Akshay, to kind of quantify what is the size of the population that is affected by this type of income?
In the world, there are about 2 billion people who are underserved. And they are underserved because of one reason: income bias. Either their income is different, it's not of a certain size, or their income does not come in a particular frequency, or their income does not have a paycheck. Income bias is at the heart of people being underserved financially around the world. And there are 2 billion people who are impacted by this. In the US, there are about 100 million people.
Can you comment a little bit more about this 100 million people in the US that are underserved? What does underserved mean, and how this affects their life?
A lot of them don't get a bank account. Some of them, if they get a bank account, they can only get the bank account, but they have to pay fees for it. If they need something else, like if they need a small dollar credit, or if they need loans, or if they need some kind of financial help, it is very, very challenging. I'll just give you an example. During my Uber rides, I met a lady. That lady, she is the inventor of CRM, customer relationship management. She actually invented CRM. And she's very good friends with Tim Berners-Lee, who invented the internet. And I gave her a ride from San Francisco to Palo Alto, where she has her own house. And as I started telling her my story, she shared her story. So she does consulting and she does Airbnb. That's her income. And a lot of times she doesn't have a paycheck, and that income is not like, it's fluctuating always. She banks with US Bank. US bank charges her in some sorts of fees about $12 to $14 a month for serving her, because they don't consider her income to be actual income because there's no paycheck. This is just one example. I have one customer. My customer is a cleaning technician for a mega church in Washington, D.C. Together, he and his wife, they earn about $1,800 to $2,000 a month. And he has a paycheck. He's a W-2. He has his accounts with the, I think the Army Bank or one of those banks, and they charge him $12 a month just to have a bank account. Plus, he has challenges like his income keeps fluctuating because shift keeps changing. His shift changes or his wife's shift changes. This is also evident from the fact that GoFundMe has 50 million active users. They're raising 5 million every day because so many of these people need help for various reasons, and they cannot go to traditional financial institutions, right? So they have to they rely on donations and other kinds of help. So it's a big challenge.
I think something that in a way it's surprising, because in the in the imagination of people, the US is rich, advanced, wealthy, and happy country. So finding out that 100 million people are in a precarious financial situation, it's kind of surprising for even us that live here and for the rest of the world. If that is the situation, how is Common Bank going to help this population?
We went out into the market. We really put ourselves in the shoes of our customers, experienced their lifestyle, and understood their challenges. And we built an algorithm that can underwrite credit for people with this kind of income, where there is no paycheck. That income may not even be real income. It could be like benefits given by the government. Doesn't matter. We are able to take that and we are able to underwrite credit. That's a unique innovation. That's something that, so any kind of credit underwriting written today, it's been pretty much the same for thousands of years. It's just evolved and gotten better maybe using technology. But in reality, the fundamentals have not changed. This is where we are creating a paradigm shift. That's the first thing. Second, what we realized is, to help people, to give people financial help, if we went to some institutional lender, even though we want to be mission driven and we want to do right things, at some point, the way we operate is dictated by us, taking money from that lender, giving that lender first paying off the interest, then paying off the principal, and then taking care of business for us. At some point we may not be aligned with our mission, or our partners may not be aligned with the mission. So we went ahead and we came up with this concept where the affluent and the underserved can come on a single platform and help each other out. So these are two concepts. Based on these two concepts, we created a common stack of banking and financial services. Basically, bank, borrow, budget, tax. These are the four pillars. That's why it's called Common Bank, because it's a common stack of banking and financial services that's 100% inclusive. It doesn't matter what kind of income you earn. Doesn't matter the size of the income, the type of the income, the frequency of the income, fluctuating, non-fluctuating, doesn't matter. We serve them. So that's why it's called Common Bank, first thing. So there is no income bias. That's how we are very unique. That's how we are able to help these people. Second, we are able to underwrite credit for these people, irrespective of their income. Third, we created this new fixed income asset called community savings. It's very simple to understand. You put money in it for 90 days, you will earn rewards. If you leave it for a year, those rewards add up to 10% of the money you have put. So it's 10% return, which is unprecedented in the world today. And so we are allowing, I'm a millennial. I have a lot of friends who work at Facebook, Google, and all these big companies. And they don't trust the financial services and financial providers today because of all the things that has happened. For example, Wells Fargo. A lot of times it's confusing. The stock market or other apps that are out there that say that, oh, put your money and grow your money. But in the fine print, it says, we don't guarantee anything. This money could be gone. It's fluctuating, blah, blah. So it's confusing. So we created something very simple. It's FDIC insured, guaranteed by us. You put the money, at the end of a year, you get 10%. There's a cap, of course, because we don't want greedy people coming in. We want people genuinely coming in, growing their money and helping others. So there's a cap of $10,000. So you cannot come in and put 10 million in it. And you can only put in as much money as your true spend. Your income minus your expenses, right? Whatever your true disposable income is, you can only put that much money in. And so we created this common community savings account that actually drives the financial help for the underserved. And the financial help that we provide to underserved is no credit checks, no fees, no interest, 100% without fees, without any bank fees.
So I would like to, just for a second, dig a little bit more on the service that you provide to people. So in terms of, do you give a credit card? Do you give a loan? What type of loan? Do you give the possibility to do wire transfer? So can we just get an idea of what people are going to get for free, basically?
Common Bank is available on iOS and Android, or will be available on iOS and Android. It's 100% through a mobile app. You get everything that you get from a traditional bank: checking account, savings account, physical debit card with chip and pin, no ATM fees, up to 50. There are about 50,000 ATMs where you can go and withdraw money, biometric security, bank level security, basically. In addition to that, the two things that we are doing is we are the community savings account, which is something very new and very different, where you put in $500 or more for 90 days or more, you can earn up to 10% over a year. And we call what we call common cash, $0 to $500 of financial help every month, no interest, no fees, no credit checks. The big difference here is there are a lot of products out there in the market where they will give you your paycheck ahead of time. That's not what we are doing. This is not a payday loan. This is not a cash advance. This is not a loan. It's financial help. This is money in addition to what you're making, because for a lot of people, the money that they're making is not sufficient. So that's the big difference here between what we are doing and what others are doing. And we are 100% inclusive. So there are a lot of apps that will say, oh, we'll give you like interest-free money, but they'll say, I need a timesheet. I need you to use my app. When you go into your business, when you come out of your work location, you need to send a timesheet, you need to send a paycheck. We don't do any of those things.
So unlikely other companies that do pay check in advance, this is really a financial help. And basically, Common Bank and Akshay have identified a way that they can make this being a business, being a profitable business, and satisfying this huge need in the market, in the marketplace. And at the core of all of this, there is a complex optimization, as he was saying before, and that's our friends AI. So let's see how AI is helping you in making this thing possible. Because if you tell people, they say, "Oh, how do they do it?" Like a question mark. So there'd be a question mark. But there is something here. There is something. So let's talk about what makes this possible.
So we have a neural risk engine that's in the backend that's actually doing all of this math for us. And I'll talk about it at a high level because it's proprietary technology. So when a credit decision is made for anybody, when a decision is made to give money to someone, there are certain dimensions or certain parameters that you look at. Typically, what is done is people are looking at and saying, has this person ever taken money? Was he a good actor or a bad actor? Did they pay back on time? How much money was it? And how much are they earning now? And based on that, they're giving money. Sometimes they give money that is more than what you probably should be given because they don't care. They just want to give you money and they want you to pay back and at a certain interest rate. And when they are making the decision, they're looking at certain parameters and they're giving weights to those parameters. And sometimes, or in most cases, they give more weight to certain things than other things.
What are the things that they give a lot of weight? So just for our audience to understand here,
like delinquencies. Have you ever taken money and have you paid back? And were you delayed? Did you make any mistakes? Did you pay less? And stuff like that. And the second thing is how much do you make? And a lot of times they also look at the FICO score, which is not 100% representative of your financial life. It is a representation maybe of your credit history. That means how much money you have borrowed and how have you done well with that money. The difference between what that and what we are doing is we are actually looking at your entire financial life. Are you earning money? How are you earning money? How are you spending that money? What is your financial life like? and we are looking at you from every possible angle, and as much to a very, very high degree, we try to be unbiased and not give like higher weights to one versus another. And the neural risk engine does this computation through several permutation and combinations and comes up with your qualification, your number.
Let's give people a little bit of the sense why this is possible, why the traditional bank do not do it, and why this is possible. What is, if you like, the high level mechanism? Like, it's because you give short-term loans, it's because you have many of these short-term loans, and so statistically it's very unlikely that all of them fail at the same time. So in simple terms, why this is possible, and instead normal banks cannot do that?
Because of the structures that they have put in place and the technologies that they have invested in, and the time that they have spent to do that. For them, they're too big to change these mechanisms. Plus, they have a worldview. They have a very specific worldview on how financials operated and how the world operates. So think of a bank. It's taking money from a lot of people, affluent people mostly, and then it's investing in a few long-term investments. Those investments may not be towards social good. It could be for an oil company that has done thousands of oil spills, and they're continuing to invest in them. And the returns come over hundreds of years. And whenever the returns come, the returns go towards the principal, towards the interest, that is the bank's revenue, and then towards the principal. And they give a very small percentage of that back to the end user. That's why the interest rates are so low. In our case, we don't have to do any of those things. 100% of all the money, first of all, only the money that you put in the community savings is used. That money only goes to help other people who are underserved. And these people have challenges every month. So they're borrowing a small amount for a 30-day period, paying it back, again coming back and taking help. This thing is getting cycled again and again and again. And it's going to a lot of people. And a good bunch of people are, as a thank you, they're giving voluntary contributions. That adds to our revenue stream. In addition to that, we have traditional revenue streams just like other banks, interest earned on deposits, debit card transactions. You add all of that, and we don't have any tangible assets. We don't have big offices. We have not made tremendous amount of infrastructure investment thanks to technology advancements such as AWS. We get to build our whole system on a serverless architecture that's easily scalable. So for all of these several reasons, our margins are pretty good. And we are, unlike the banks, we are not keeping a major portion of the margin. We are happy to give back that margin to our customers. And hence, on one side, we are able to give high returns to the people who are putting money in the community savings to help others. On the other side, we are able to give interest-free, fee-free financial help to the underserved.
Really, from a business perspective now, not only from the social impact perspective, this is basically an opportunity in a marketplace to serve a large amount of underserved communities and being able to make a profit out of it. And this is just for our audience, this is a typical pattern of innovation where you can serve a community or a market segment that is completely underserved. This is actually usually one of the things that works the best, because you're competing against nobody basically in situations like this. Now, what I wanted to reflect is that one of the things you were talking about before was that you stumbled upon AI, not so much because you wanted to build an AI company first, but because when you start to work on the algorithms to make all this system work, you realize you needed more. So why don't we talk about why this business is possible today and why it was not possible 10 years ago? What are the number of things or technological advancements that have made it possible today?
Number one is talent. The amount of time and talent that the time spent on data sciences and improving AI algorithms and applying AI to to build practical solutions has gone up exponentially. People thinking about it, people thinking about data very differently. They call data the new oil. All of that has helped. So accessibility to talent. It is still hard to get good talent in this space, but at least there is talent. And precedence to what we are doing. A lot of people have tried a lot of things. So there is precedence to this, and we get to stand on the shoulders of all the hard work people have put in already in this space. And the cost of technology is so dramatically reduced thanks to innovations by companies like Amazon and Amazon Web Services, access to technology, access to AI, ability to quickly put something out there, test it out, and iterate. It's also the appetite and the number of open banking platforms, the ability for you to actually partner, because none of this is possible if we don't have partners. The precedents that other companies put in place, the appetite for the financial industry itself to get involved, to work with startups like us, has also played a tremendous role for us to get here. So just to give you an example, whether it's BBVA, which has a tremendous open banking platform, or other open banking platforms that are powering apps every day and financial services every day, it's that it has just gone up exponentially. Also, I have to highlight that with millennials now, there are 92 million millennials who are in the prime of their spending years. The way they think, the way they operate, and the way they live their life has also increased the need for these kinds of services. So it's a ripple effect of all of these things put together.
So let's switch gear here and look a little bit of the future. Where are we going 5 years from now? Where you see this common bank being 5 years from now? But most importantly, what will be the impact 5 years from now into the economy, if you like?
The way we look at this is today we're building a product. We have a common stack of banking and financial services that is sitting on top of what we call the common financial network, which is a network of banks, not one single bank, but with a set of partner banks. We see that product evolving into a platform where we have half or more banks integrated into the common financial network and the common stack of banking and financial services sitting on top of it, with open standardized APIs on top of our common stack, where people can come and build really unique solutions. Think of us like Slack, and think of those solutions as bots that are helping unique problems that individuals are facing. And then 10 years from there, this becoming a really powerful ecosystem. That's how I see this thing growing: product, platform, ecosystem. And through this journey, we are hoping we get to go global one day. And if we can get 1/3 of the world population to solve the problems, to work together with 2/3 of the population that actually really needs financial help, by bringing them together and getting them to help each other out, I think we would have created a very symbiotic relationship in society, on top of which great things can happen. A lot more people are financially stable, a lot more people respect, understand, and are willing to help each other out. And it's creating a great financial as well as social environment in the world. For me, I'll be super happy if they're like, we have 6 billion people on our platform, where 2 billion people are actually powering and helping financially the other 4 billion people. That would be awesome.
So there's been a lot of fears in the media, basically motivated by the fact that artificial intelligence could disrupt lots of jobs, or it could create these big brothers like the large internet companies, or it could bias the decisions. And that's, I think, bias is pretty relevant here, because what you're doing is actually you're creating a situation where biases are being removed with artificial intelligence. So I'd like to ask you this: in the history of the humanity, there have been lots of technology that come out, and very often the reality is that they can be positive or negative depending on how the humans use them. But what do you think is really the balance right now of what we gain from AI and what we lose? So what is your viewpoint as a society? What do you think we will gain and what do you think we will lose?
I think it's a path towards a better future. The more data that we have, the more quicker problems surface, the more quicker we can solve those problems, and the better the world becomes. Just a very simple example: a lot of cars today, automatic braking comes almost standard. That was unheard of. That is what technology does. I don't know if you've seen this ad. I think it's the Audi e-tron ad. So this lady is driving in the desert, and there's a plane that flies on top, and so it creates a lot of dust around her. And then when she comes out of the dust, suddenly there's actually a trailer but the car automatically stops. I mean, that's a fun ad, but there is real implications to that. So that's what technology does. I see that AI making the world a better place. Only when problems arise that we actually go and address them and get better. So it's all good, I think.
So you are one of the positive, and on that note, I think we thank you for this interview. I believe this is a very interesting application of artificial intelligence. It's one where we're really looking at serving needs that was not possible before, and that's what's great. Sometimes new technology are perceived in the marketplace like something that can be better, faster, and cheaper, but actually, in this case, we're going to create something that was not possible before. So it's a new use case, it's a new underserved need, and that's something that I invite the audience to consider when they basically think of AI. So the opportunity to really create something that was not possible before, entirely new. With that said, Akshay, thank you so much. I thank our audience for being here. If you're interested, just reach me out.
Check us out at commonbank.co, commonbank.co, commonbank.co. Please sign up. You get to earn 10% per annum, which is unprecedented, and you get to help someone lead a better life.
So you have heard the story. It's a pretty interesting company. Take a look at this website, and if you're interested, sign up as well. Okay, thank you so much. Thank you so much, Akshay.
Thank you.